My outlook for the year 2016 is quite bearish. A leading fund manager was recently asked that, can you give me a projection of your best case scenario for 2016 for a important index like the London FTSE, for example. So they asked him that, could you tell us what could happen in the best of scenarios and what could happen in the worst of scenarios? Now, according to him, the London FTSE, which is around 6,100 at its index level currently, could go down to 5,500 in a worst case scenario and could go up to 6,500 in a best case scenario. Now, let us say you are an investor. I give you, let us say, £1 million to invest. How would you know which way the market is going to go? Whether it's going to go the way of the best case scenario or whether it's going to go the worst case scenario? Which means that the parameters are themselves not clear. How do you invest your money? Is it a toss of a coin? How would you know which way are you headed? And there's such a big divergence between the worst case scenario and the best case scenario that who knows, maybe the future lies somewhere in between, so just take a simple average. Now, but that's exactly where you are currently. So why invest? Just put your money in a deposit in bank and go to sleep. This is what I believe is simply financial entertainment. I mean, these types of scenario guessing is basically means very little for an investor. Anyway, coming back to the outlook for 2016, as you can see, most indices have started on a very negative note. The very first trading day was very negative. China continues to be circumspect, though the People's Bank of China have initiated further measures to loosen monetary policy to infuse more liquidity into the system. Yet there's more to be done. Chinese stock markets look to be quite overbought, and some correction over there in the Shanghai Composite Index is definitely on the cards. Um, as far as America is concerned, I personally believe that it is also heading to a recession. In fact, the whole world is, America being one of the important countries, because that has not been factored in or taken into consideration in projecting the Dow Jones Industrial Average in 2016. In fact, many people believe that the US Fed will raise interest rates at least three times in 2016. But if recessionary conditions arise, if a recessionary environment prevails in America, then in that scenario, the US Federal Reserve would be very loath to raise interest rates, may have to, in fact, reduce interest rates to bring it at par with what prevailed for the better half of 2015. In this scenario, Fed, which had become a hero in everyone's eyes, suddenly become a villain. uh, there are geopolitical tensions looming large in the background. You will find that there is uncertainty over the Iran Saudi Arabia relations, which diplomatically have been called off. India Pakistan is also standing to great strain. There was a terror attack, and should that repeat itself in some form, which I would say, God forbid, but if that happens, that could lead to further escalation of tensions. Um, and elsewhere in the world, also, you see Europe not going, not taking off to the extent that was desired. Japan's Abenomics seems to be circumspect now. People don't think it is delivering the goods. In short, I believe that just using monetary policy to help a country come out of recession is not working any further. In fact, it is only delaying the process, and or rather delaying the inevitable. There has to be some pain. Only then you'll find that economies will start coming out. Using monetary policy itself as a tool to get out of recession, to get out of an economic slump, is not the answer. The countries need to do many other things. Otherwise, you can just throw money around and help Well, that has helped to some extent. In America has definitely come out. Unemployment rate has fallen down quite dramatically. But if you look deep inside, try to analyze, you will find that there are many voluntary workers who have left the job force uh, because they cannot find jobs, so they just left. Therefore, they do not enter into the calculation of the unemployment rate, which is therefore artificially low than what should be. Not only that, you see the entire recovery of the West, where quantitative easing has been used so much, is very fragile. It almost feels like there's one storm coming in and it will fall apart. So the question was that posed to me in 2015, where also I was negative, was whether the negativity will sustain for most part of 2015. I said yes, it will. Now in 2016, a lot of commentators believe that the second half of the year will be better, or the recessionary conditions may dwindle by then. I don't think so. I believe it's only going to worsen, and the recessionary conditions will even get worse as the year progresses. This will continue for most of 2016. However, this does not mean that there are no pockets of opportunities. There indeed will be places to invest, like I've said many times, in India's infrastructure, which the government is trying very, very hard. Infrastructure is not in a very good shape, or rather, not in a good shape at all in India. The government is trying very hard to build new roads and new ways of communication, and that any investments in that area will reap huge dividends. And also the digitization of many countries, including India, paper records are being replaced by digitization. That will definitely be a good place to invest. But overall, the scenario for 2016 is extremely bearish, and you may see some corrections on the upside from time to time, but they will not sustain. So you should take that into consideration, and I believe the outlook is bearish. And for an investor who is tracking more the exchange traded funds, who's tracking the indices, I would say stay out. The rest can be stock selective, stock specific investments can be taken, which will always yield good dividends even in bearish markets. Take care. Happy investing. Bye bye.